All right. Good afternoon, traders. It is Wednesday, March the 4th. My name is Melissa, also known as Mel here in the Simpler Trading community. I'm a trader here. I trade with Trendy John in the Trendy Trading Room and SPX room here at Simpler Trading. And my main focus, first and foremost, always is supply and demand trading. And I am a very patient and disciplined trader that believes in waiting for my process to play out before placing trades. And yeah, just trading with discipline and consistency. So, enough about me. Thanks for joining me here in the live YouTube session. I hope you're having an awesome day of trading. We had a very nice bounce. The S&P 500 futures is up about 65 points. And that's a lot of points, but honestly, they're up even more than that if you consider from their overnight low to the most recent high. The ES futures are actually up, golly, 118. So very nice. Apologies. Very nice bounce right there. 118 points, nothing to scoff at in the ES futures. So very great bullish trending day here on the smaller time frame look back. But I want to just point out that you see the green zone below price where overnight at about 1:15 a.m. Eastern time price pulled back into this zone. This green zone right here on my chart has been here for quite a while. That is a demand zone, guys. And a demand zone is a place in the market that I am looking for price to bounce from. I am looking for buyers to step in, buyers to overwhelm sellers, and for uh, the buy orders to outpower sell orders, meaning that the price on the equity goes up. And if I look and show you here on that intraday chart where I got that green zone, it is based on this move for on the daily chart. On the 4-hour chart, I have the inside and up candlestick structure that I'm looking for a demand zone. And although this zone has been tested several times, we continue to see buyers step in here. And if I didn't have this zone on my chart, I would have no idea exactly where to buy a dip at, right? Even yesterday on the huge down day when the markets, I think at one point when I was looking in the pre market, we were down like 160 points or more. That was a big, huge pullback. But it just brought price to the bottom of the demand zone. And you can tell by the bottoming wick on yesterday's candle that buyers definitely stepped in there. That's why I truly believe that supply and demand trading is the way to go. It just gives me confidence of knowing that if I'm buying a dip, I have a high probability chance of the trade working out in this zone. So I wanted to give you some buy zones or demand zones and sell zones or supply zones for not only um, ES futures, but also for the major indexes as well as the Mag 7 names. Because to be honest, in 2026, my main trade, a vast majority of my trades have been day trading, scalp trading, SPX to be more specific. And why has that been the case? Well, because on the higher time frame charts, I just have not been getting the setups to take a lot of swing trades. So, yes, my trading has been mainly focused on day trades, but I am ready to get some potential swing trades and even long term trades or leap trade entries here. And I know that everybody loves to hear the levels on the Mag 7 name. So I decided for today, those were the levels that I'm going to share with you where I want to be a buyer. What am I waiting for? What kind of dip am I waiting for to buy for swing trades as well as longer term leap type trades? All right, so let's get started. Let's start first with the ES futures on the weekly chart. This blue line right here is a trendy edge. It's a trendy indicator and it is identifying a playing field of supply. Because this is an upper edge, there is supply above this edge. Now, when we opened the year up above this upper edge, that gave us caution in the trendy room here at Simpler to not be so quick to put on a bunch of swing trade positions to the upside. Why? Because we knew we were at resistance or at supply and we needed to be patient before loading the boat to the upside. And that has worked out very well. As we continue on each pop, making a lower high at this supply zone here on the weekly chart, that is further proof that we are making lower highs and lower lows. So for now, I need to be cautious, but ready to buy a dip back in this demand zone here on the weekly chart. So that main level for ES futures is going to be 67.22.23 by 65.25. That's where I am looking to buy a dip. I don't even have to look at a let's say an Apple chart or an NVIDIA chart. If the ES futures are in this demand zone for me, I can buy the dip on some of my favorite names. All right, I do chart out those other names, but I wouldn't necessarily have to because if the overall market is in a zone that I'm looking to go long from, I can go long Apple based on this ES chart. All right. Now, am I super excited about this nice rally that has the ES futures almost up here at the psychological value of 6,900? You bet. But am I looking to go load the boat on swing trades to the upside with the ES futures coming into a resistance area and very close to a supply zone? I am not. All right. So I like to catch things on sale. That on sale for me is in demand zones and ES futures demand zone that I'm looking at is really, I'm going to say 6750 because of this trendy edge. But basically, this 200 point range right here is what I will be watching for days to come if we get pullbacks into this zone. Now, let's take a look at NASDAQ. And I'm going to talk about the same thing here for the NASDAQ. If I look at or if I run Fibonacci's based on the same rally that I ran those Fibonacci's for the ES futures, right? I want to run the same for the NASDAQ futures. So let me show you exactly where I ran those Fibonacci levels from. If I put in the 100, that's going to be the bottom, and then the 0 is going to be the top. So these Fibonacci levels are ran from where we bottomed in November, right before the rally for Thanksgiving, up to the all-time high. So if I go to NASDAQ and I run those same Fibonacci's there, that's going to be from here to the high that was created. Feels like forever ago because it was there. All right. And so you can see that the NASDAQ, although it is showing relative weakness to the ES futures, it is holding above, sorry, goodness, it is holding above that golden Fibonacci level. All right. So my buy zone on the NASDAQ on this weekly chart would be here between 24,726 and 23,904. That is where I would be a buyer based on the NASDAQ demand zone right there. All right. And seller, where would I want to cover my longs or be a seller? That's going to be in the supply zone up here at 25,530 by the all-time high, 26,400. All right. So am I going to load up right now and start long swing positions where NASDAQ is at? No, because it's coming into resistance and it is much closer to the supply zone than it is the demand zone. All right. I don't want to leave out the Dow because it is as important as the others. My buy zone on the Dow is 48,600 to 47,504. Now, I want to be a buyer in this zone on the names relative to the Dow. Okay, so think of financials or healthcare, industrials, the names more related there. You do have resistance or supply up here near 49,642 by the all-time high of 50,611. The zones are pretty close together. And when we have supply and demand close to each other, that is very often when we will see these choppy conditions. In choppy conditions, I want to be a buyer towards the lower end of the chop, and I want to be a seller towards the upper end of the chop. So, without further ado, let me give you some levels on those Mag 7 names. Now, I said that I would give you some levels related to higher time frame trades as well as a trade I want to be in for 2 weeks or 2 months. There's a big difference between trades that I am going to be in for a year, 2 years, 5 years, 10 years, compared to trades I'm going to be in for a couple of weeks or a couple of months. So, for the long term, and this is mainly the way that I trade long term is mainly through equity. My buy zones on Apple are here at right around 230 to 212 and then 195 to 182 and 171 to 160. I know it sounds crazy to even have a buy zone all the way down here, but I promise you last year when we opened up the year up here, people thought, "What? You have a buy zone all the way down there on Apple?" And the answer to the question would be yes. I'll just share with you my higher time frame buy zones in 2025. This was a buy zone that was given to the traders in the room before price ever got there. All right. And you can bet I was buying here. Okay. So 2026, these are my buy zones that I will layer into a full position on Apple equity. And of course, when I'm buying these dips, I can also use options to play the downside. I can use options to play the upside from these buy zones. There's a lot of ways that I can work and make some money on the way up and the way down using these zones for longer term trades. All right, so that's my buy zones. As far as sell zones or where I'm looking to trim equity on Apple in 2026, it is 275 and then 300 and 331 are the trim levels up there for Apple. All right. Let's look at Apple though from a smaller time frame. If I'm looking at my buy zone on a weekly chart, I consider this buy the dip in demand on a weekly chart for trades that I want to be in for a couple of months. It isn't a zone that I would necessarily trade for long term, but it is a zone that I would be interested in buying a dip for a relief bounce or a trade that I was going to be in for 2 or 3 months. So that buy zone for, let's say, options dated out to June for me would be 252 to 244. Now, you might ask, if you're buying in this demand zone, what is your stop? And that would be a great question. So I'm looking at a weekly chart and I trust a zone. I trust that buyers are going to step in here. So I have to be okay with the risk from the top of this zone to the bottom of this zone. Not just that, I do not want to be wicked out of a trade. Let's think about this. If I was the old trader that I used to get wicked out on trades, I would have been stopped out on this trade right here back the week of January 19th. You see how this candle went below that demand zone? But I'm not that trader anymore. I understand my risk inside of this zone. I trade with an allocation amount that I'm comfortable with going to zero. Rarely does that happen. But if it were, it's not going to wreck my account and it's not going to wreck my emotions. Okay. I'm not going to be the trader that gets stopped out here at 244 only to watch price go all the way to my target. All right. So that's very, very important for you to understand. I commit to whatever time frame I'm trading that candle to close. So if I get a dip down here and Apple comes in at 252 to 244, I'm going to use my confirmation process before getting in this trade. But if I take an entry here, my stop would be a weekly candle that closes below 244. And regarding that confirmation and what I'm looking for in these zones, I'm going to do a class with Trendy John. Him and I are doing a 2026 supply and demand evolution class. We have a free webinar about it on March 11th. So 1 week from today, be sure and sign up for that webinar. The good thing is, even if you can't attend the webinar live, if you register for the webinar, you will get a link to the replay. We're going to talk all about what has evolutionized in our supply and demand trading. We're going to give some brand new terminology that we have never shared before, and how we're using that to get these precise entries and some other really cool things that have evolved in our trading over the last many years. All right, so be sure and sign up for that webinar. And in the class that we will be teaching on March 21st, I will go into detail about that confirmation process that has kept me from catching falling knives or stepping in front of freight trains this year. Okay, now let's look at good old Amazon, as far as where I'm looking to buy a dip. So I'm going to first talk about the long-term type of trade. I like to look at bigger time frame candles here. I actually typically would use a quarterly candle, but I'm just going to show you the monthly candles. I already own equity in Amazon, but some traders in the room that weren't already in a position, I told them that right here at this trendy mid edge at about 209, 210 would be a place that if they wanted to just get their feet wet for a long-term trade, that is a place that you could get your feet wet. As far as where I'm looking to buy the dip long-term for Amazon, whether that is with leap type options out 12 months or more, that is going to be 190 to 169 and a half, then 149 to 122, and 101 to 81. These are my buy zones. And again, believe me, I had zones that did not seem like price was going to pull back there in 2025. And look, I was buying the dip at 166 on Amazon, and my last trim last year was at 253. So it does happen, but the important thing is you know the levels that you want to be buying these dips at. As far as trims for Amazon, 247, 267, and 288. All right, let's look at Google next. I gotta speed this up so I get through all of them. This is longer term on Google. My buy zones down here, 234.64 to 206. As far as the shorter time frame goes, like trades I'm gonna be in for a month, 2, 3 months, something like that, I would use my weekly demand zone here on Google, and that's going to be at or around 286 to 264. That's where I'm looking to buy the dip on Google. And I forgot to give you that level for Amazon. So let me quickly go back there and give you the level for Amazon. First off, the first zone that I was interested in is 200 by 212. Now we have popped up from there and we're coming into that first area of resistance, which is this EMA cloud here. So I wouldn't be looking to start the trade there. But if we get back down into this zone and you're looking for a swing trade back up to 218 by 223, and then finally 236 to 258. This is the zone I would look to buy the dip. If we close below 200, that big psychological value of 200, then I want to be a dip buyer down near 175. All right, let's look at Meta. I'm going to give you the levels for the longer term trade first. I will say that we bought the dip on Meta at 605 this year, and it's done well, right? My trim is still up here, another $100, but we did buy this dip at 605, and Meta is doing well. I would add to Meta at 516 and 460, 379, even 198. if it were to go down there. As far as my shorter term demand zone where I'm looking to be a buyer on Meta, that's going to be down here at 592 and a half by 529.50. All right. Microsoft, this is one that actually got some buys in this year and also not quite to where I want to trim those buys at 426. So I bought some at 426 and then I bought some more at 385 down here. I'm going to trim some of those that I bought that dip, right? Near 425 and 450 on Microsoft. That is leap trades. As far as the shorter time frame trade goes, that's going to be this zone right here. 392, let's call it, by 344. As far as areas that I would want to take some profit, it's going to be 325 again. And then, of course, 350 to 390, or sorry, 450 to 490 there. So 425 would be the first trim from this demand zone. And here's my ultimate target up here. All right. But just, I mean, you got to marvel at the fact that this is where buyers are stepping in. It's not coincidence, my friends. Supply and demand drive this market. Okay. All right. NVIDIA, again, longer term leap type trades for NVIDIA. I'm looking to buy down near 150, 131, then 100 to $75. Last year, Trendy John and I were buying down NVIDIA down at $86. People thought we were crazy because it was a pretty bearish negative sentiment in the market at that time. But it wasn't crazy because we were trimming those $86 NVIDIA levels up here near 200. So not crazy, but you got to know where the levels are at before the price gets there. Now let me give you my shorter term, just swing type trade zone. Look how well this one worked yet again. It has worked time and time again. 175 to 166 is where I want to be a buyer at demand on NVIDIA. You're right at resistance where price is right now, but my targets above are 190, 198, and then of course the all-time high up there at 212. Trendy John had a Tesla trade actually today for I can't remember, swing trade or a day trade, but made money there for sure. As far as longer term goes, I'm looking to be a buyer, just starting a position down here near 350 on Tesla and then 298 to 244. As far as just a swing trade goes for Tesla, my buy zone is down here. So I've got one zone I could use using Fibonacci principles, which is going to be 356 by 323. But I also have a demand zone at 328 by 273. So I will start looking for swing trades on a pullback on Tesla down near 356. So the moral of the story here is I am still waiting for a little deeper pullback for me to start long-term trades or swing trades that I intend to be in for a month or two. I'm very patient, very disciplined, and I can still make money day trading or maybe swinging some trades out for 2 to 5 days. But until we get those deeper pullbacks and I get some confirmation, I'm going to keep my focus on the shorter term type of swings unless we make it into these higher time frame demand zones. All right. Thanks a lot for sitting with me in this live session where I'm sharing where I want to buy the dip in the Mag 7. I hope you found it valuable, and I would love to follow up with you maybe in 6 months just to see where we set. So maybe I'll do a live session in July or August just to go over these levels again. I think that would be cool. If you haven't already, will you hit the like button? And if you're not a member of Simpler Trading in one of the many trading rooms, I encourage you to join a room. We have $7 trials all throughout the site and it is absolutely worth every single penny to come and check us out. Trading can be lonely, and I don't want you to be trading alone. So come and join our community. I'd love to see you in the trendy room or the SPX room. And I hope all of you have a great rest of your day, great rest of the week, and I will see you in the next video. Bye bye, guys.